Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the high time frame with this first bullish scenario where the high of wave 1 or A is over here, followed then by a 3-wave corrective structure looking for a continuation to the upside. In this particular scenario, price bounced twice on the 0.382, which is a more rare target for a wave 2 and a more common target for a wave B. In case price moves to the upside, it automatically means that the probabilities can be a bit higher that we're looking for a wave C instead of a wave 3. But that depends on the move that we get to the upside, because a wave 3 should be very explosive, high volume, parabolic, and a wave C takes a bit more time and is a bit more lazy, most commonly at least. In this particular scenario, we're then looking for a 3-wave structure like this already finished. And if we then go to the bullish scenarios on the medium time frame, then the first scenario here is an ABC flat. And this is a running flat on my chart because wave C did not take the low of wave A in an ABC flat. Most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B. You don't want this to be the low and you want to see continuation to the upside. Now I do realize that on some other charts like Bybit, this low over here has been taken, or I should say this low has been taken with a bit quick to 23.6k. So that is then a regular flat or an expanded flat, right? And then an A, B, and then a C that actually took the low here of wave A. But other charts like mine over here, Coinbase, did not yet take this low, and that also means like probability wise usually the charts are taking the same lows and highs on the higher time frame, and there's a high probability to do so. Now another scenario is that we have this as a wave A, a flat in B, and then a wave C to the downside. In this scenario, however, following the newer rules of Elliott Wave International, having a flat inside a bigger flat has a very low probability. But in this particular scenario, again, the target being between the 1 and the 1.236 is quite nicely respected. And then this is the low of A, which has been tagged over here. We didn't tag this low. We do have a double bottom over here, which is like a magnet for price, but at least it's below the A. But then again, an ABC flat inside a bigger flat has a very low probability. Officially, they say it's not allowed anymore, but hey, nothing is 100%. It's all a probability game. If we then zoom in to the lower time frame over here, then a scenario we have in our minds is a double 1, 2. So in this particular scenario, we have the green count being the high degree count, 1, 2, 3, 4, 5. Inside wave 3, the blue count, 1, 2, 3, 4, 5. Now, preferably the second wave 1, the second wave 2 are shorter in time and shorter in price because they are a lower degree count compared to the green one. But as you can see, this wave 1, the second wave 1, is longer in price than the first wave 1 because it tagged the 1-to-1 taken from the low to the high of 1 to the low of 2, which compares the length in price of 1 with the price over here. That's not really what you want to see. Now if we toggle on the line chart, however, then you can see the 1-to-1 hasn't been hit. So there's a little bit of like a discussion like, did it hit, did it not hit, is it valid, is it not valid? Well, you know, there's always like the possibility that it hits the 1-to-1. It's just by a small little wick, so that's why I still have the scenario in my video as well. But then we are expecting a wave 2, where for a wave 2, the most common target is the 0.5 to the 0.786, which is between 27.2k and 26.5k. Now, if price moves to the downside, all good, all fine, but we have to keep an eye on the vertical line on the chart over here. The vertical line is a fib time taken from the high of 1 to the low of 2 and put it on the high of this second wave 1 to compare the time of the first 2 with the time of the second 2. And definitely, preferably, you're not gonna cross this vertical line with the second wave 2, as that lowers the probabilities for sure that this is a second 1, 2 for further upside, and then a bigger 3, because then you expect a big push, right? 1, 2, 1, 2, and then a big push to the upside, or another 1, 2, and then a big push to the upside. Now over here, the 1-to-1 is sitting on Sunday, the 8th of October, 10 a.m. Central European Time. A small thing to note is that if we look for big reversals, what I prefer to see is bullish CVD divergences with the actual low that's been made. However, between over here, the higher low on price, there was no bullish CVD divergences. Another scenario here is a scenario that was posted in a chart recently once again by Dasai Gaming and JZ. Now I showed the chart of Dasai Gaming yesterday. It's looking for a 1, 2, 3, 4, 5, but also JZ over here looking for the yellow count 1, 2, 3, 4, and then a wave 5 to the upside. But you can also see the bearish count in this scenario, where he has then a wave A, a wave B, and a wave C. We'll get to that in a second. But in this particular scenario, looking for a diagonal. Those are the blue lines that you can see over here on his chart. So we then have over here wave A, or wave 1, wave 2, 3, 4, and eventually 5. In this scenario, wave 2 here retraced to the 0.5, bit more rare in a diagonal. Golden pocket 786 is more common, but okay, you know, it's still a target nonetheless. Wave 3, however, is a little bit longer because of that 1-to-1 than wave 1. Now for contracting diagonal, that's not what you want to see. Wave 3 preferably is lower, shorter than wave 1, and that is expressed by this fib over here. Most common target for 3 between the 886 786, that's the highest probability. The 1-to-1 officially is an invalidation, but if we then again take on the line chart, you can see the 886 over here has been nicely respected. So, you know, with a grain of salt, we can at least continue to observe what price does over here more locally. For a wave 4, the 0.5 to the 236 is most common for a diagonal. Over here, the 0.5 has been hit. But if we do something like this, we then go to a more rare target, which is the golden pocket. It's a less common target, I should say. It's orange. The gray ones down here, those are the rare targets for a diagonal. And what we also have to keep in mind regarding a diagonal, besides, of course, the length of 3, which is a bit long, is that preferably price is not going to hit the low of this channel, because then it's not a contracting diagonal anymore, and a contracting diagonal is by far most common. An expanding diagonal is very rare. So in this scenario, you then have, right, 1, 2, 3, 4, 5. And if I toggle on the diagonal, well, if price is going to fall to the downside and go to the golden pocket here, then you can see it will also hit the lower trend line, which is actually not what you want to see, because that then invalidates a contracting diagonal. If we then zoom out once more and go to the second bullish scenario that I have on the high time frame, then in this scenario, we have wave A or 1 on this particular pivot. Now, of course, the bullish count to the upside is then different. In this count, we then have 1, 2, 1, 2, 3, 4, 5 for then a 3 over here, 4, 5. So this over here is your wave 2. This is your wave 4. That's why this is like an alternative count, because there's a big difference between 2 and 4 over here in comparison with this count, where this is then over here by itself a wave 1, 2, 3, sideways 4, 5. Now, I do not like to count this whole move as one impulse to the upside, because then it's like 1, 2, 3, 4, 5, but wave 1, or at least the wick of 1, and the lows of 4 are have overlap. And overlap between 1 and 4 is not what you want to see in an impulsive structure. So I prefer to count this as a separate structure, and then 1, 2, 3, 4, 5, or if we have a 1, 2, then another 1, 2, 3, 4, 5, or 3, 4, 5. So in this scenario, wave 2 and 4 have a big difference in time. And it does mean that this is then the high of A or 1 after last impulse up. And you can look for a 3-wave structure to the downside, where you still expect the double bottom to be taken and price to fall in the 0.5 to the 786. Now, preferably, what I would like to see is fear. I like to see fear for a reversal, right? Like, that would be nice. Of course, price can keep pumping, right? But what's actually nice is if you get a move to the downside and make people scared, right? In the market, people then sell whatever they have to sell into the pockets of the bigger positions that then move it back towards the upside. Now, if price does move to the downside, you can see I have some extra support areas inside this target box. First one here down, 21.8, 22.6. Then just below the golden pocket, 20.2, 20.6. And then the 786 area, 18.7, 19.1. If we zoom in to this structure over here, we're looking for a three-wave structure like this to the downside. So we then have over here an ABC, 5 waves to the downside, 3 waves up, looking for another 5-wave move down. As you can see over here, we have the double bottom at 24.7k, very attractive, always a magnet for price, something to keep in mind. Usually a double bottom, is taken on higher time frames. It's actually quite rare to not have a double bottom that's not taken, but that would be interesting, of course, as a fake, basically just continuing. But in this scenario, double bottom over here, you expect it to be taken. Also, you expect the wick on Bybit to be filled, which is this one over here, by the way. On the BTC USD perpetual contract, you can see the wick over here, which goes to 23.6k. And then also this wick, after a 3-wave structure, we can move to the downside and fill that wick as well, which would be nice. So in this scenario, we are then looking for a 3-wave structure to the upside for B. The 0.5 to the 886 is the whole target area for B. So the 0.5 now has been tapped. And if we look into this structure over here, then what we are looking for is, of course, a 3-wave structure, right? We're looking for a 3-wave move to the upside, and then potentially here an ABC or WXY. But in both cases, the most common target is the 1 to the 1.236, taken from the low to the high to the low over here, where over here you can see it's been hit very nicely. It's been acting as resistance for then the beginning of a move to the downside. Now, something that I think is also interesting is this volume profile. Definitely want to show this again. Also the newer one, I'll talk about it in a second. First, this bigger volume profile over here, tapped once, tapped twice, resistor or a support, value area high. The more often you test it, the weaker it becomes. So if price comes down again, you can imagine it just falls to the bottom over here, where we then do have additional support. So that is very nice indeed. More locally, what you can see here is that price has also hit the value area high again. So the more local value area high, a volume profile taken from the first green candle over here to where price is now, value area high tested. If price re-enters this area and can get a successful retest and fall to the downside, maybe a market structure change here locally inside the volume profile, probabilities become very high to go to the point of control, value area low. And if you get this low, then the probabilities for continuation are higher as well. So that's something to at least take into account. Now, if we look on the micro, and I don't have the scenarios here prepared for you, so I have to go down here, same as yesterday. Then what we are looking for, or what's the highest probability, is that this move to the downside, however, at the moment, is a 3-wave structure, not a 5-wave move. Now, a 3-wave structure, higher probability for a corrective structure, meaning a higher probability for at least price taking this high, unless we get into a diagonal scenario where eventually you have this as a wave 1, but that is yet to be seen, of course. Locally over here, after the big push, we are now ranging for a bit. I like always to see a range, as mentioned yesterday. After a big drop, like to see a bit of a range forming to gauge the probabilities, or up or down. But this could still be an ABC and potentially a double zigzag, W, X, and then a Y. But let's continue to observe. More locally for you, I have this extra resistance area, 27.7, 27.8. In case price moves to the upside, it's important to observe the reaction over here. If price then falls to the downside, or already does, there's not much support left. Yes, this box over here, but has already been tagged, and the next one is quite low. So let's see how that goes. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.